GAC presents Being Rich with Stock Investment, a special episode in the series of How to Invest in Stock Market.
Hello friends, very much welcome to Being Rich with Stock Market, a special episode in the series of How to Invest in Stock Market by GAC. I am Abhishek Gaurav, an equity analyst by profession. Friends, equity analysts are people who suggest which shares to buy, which shares to sell, why to buy and why to sell. Friends, whenever I tell anyone about my profession, their faces glow with a shot of happiness. Probably they might think that this is the guy who is going to make us rich with his stock tips overnight. Some is true, some is false. We will explore what is true in the upcoming sessions in this episode. We'll get to know the strategies which can actually make you rich through stock market investment. What's false? To know that, stay tuned throughout the series with us. Friends, before knowing the strategies of being rich, it's imperative to know the instruments which can actually make you rich. That's why we would see our investment options, try to understand their risk and return profile. First comes large cap companies. These are companies like MRF, Britannia, Unilever, Tata Motors. These are companies so big in size, well established in their brands, abundant with resources, enough cash in their hand so that if any of their projects doesn't work very good, they can pump in enough money to make that successful, and even if that doesn't work, they can drop that project altogether and can take on new projects. If they run short of projects, they can think of acquiring new companies which has got good projects with them. Tata Motors is an example of that, which acquired Jaguar and Land Rover to expand its market into Europe and UK a few years back. So we are talking about such companies. And these are the reasons which we mentioned, which actually makes risk associated with the investment in them very less. Also, return of such companies is less as compared, because already their prices are like 5,000, 10,000, 40,000, 50,000 and even onwards for a few companies. Upside potential is really very low from here. Usually these companies are left with a lot of cash even after investing in their ongoing projects and upcoming projects. That's why they can offer huge dividends to their investors. Investors who are interested in dividend income and they have got less risk appetite and are content with lower price appreciations should invest in large cap companies. Then comes mid cap companies. These are companies like Motherson Sumi, TVS, Thomas Cook, etc. etc. These companies, as compared to large cap companies, bear greater risk profile because their size is low, their brand is not well established as of now, or regionally established, or probably in the way of establishing their brand thoroughly. They are also less with cash to fund their ongoing projects and upcoming projects. Usually these companies are debt ridden. Even to fund their ongoing projects, they need to take heavy loans from banks and other creditors. But friends, these are the companies, mid-cap companies, which are going to be large cap companies in 2 years, 3 years, 5 years or even 10 years. That's why the return is larger as compared to large cap companies. Their price is like 100 rupees, 200 rupees, 500 rupees, 1000 rupees at max, and upside potential from here is like 5,000 rupees, 10,000 rupees, 40, 50,000 and onwards. So we can understand that what kind of returns are associated with investment in mid-cap companies. Usually these companies are less with cash, that's why they can't offer huge dividends, but some mid-cap companies have been seen paying dividends to their shareholders. There are different strategies behind that, that's called corporate strategy and all that, to build trust and faith of investors in the company, that if company is able to pay dividends, company is able to sustain its products, company is looking for development and all. We will talk about that probably in different sessions. Then comes small cap companies. These small cap companies, they have got big risk profile as compared to large cap and mid cap companies. These are hardly known by people. These companies have just spawned out, and because of the reasons mentioned, they bear a very high risk, but their growth potential is also very high. These are the companies which share prices are like 20 rupees, 30 rupees, 100 rupees, 500 rupees at max, and their upside potential is to be a mid cap company or a large cap companies having share price worth 5,000, 10,000, 40, 50,000 rupees onwards. So we can understand. Such companies usually have very less resources with them. Usually they take loans on very high interest rates and all that. That's why they are left with so less cash that they can't offer much dividends to their shareholders. Then comes private equity. If you are a retail investor, you would get really very less opportunity, or will hardly get any opportunity to invest in a private company. These are private companies. Like I have established this gap. We can take the example, and if I wish to sell share of this company, then I need to look for brokers, investment banks, etc., etc. They will then arrange for buyers who will keep looking for such small companies, private companies with potentials in one area and problem in other areas. So investors expect that they will dispel the problems away and thereafter can make this company profitable. Then comes VC funds, the companies starting new and which requires fund. Such kind of funding is called VC funding or investment. Friends, my expertise lies in mid-cap companies, small-cap companies. Also, I have analyzed considerable number of private equities as well and a couple of VC investments as well. And these are the companies. So, investment option before you is mid-cap companies and small-cap companies. You do not qualify for private equity investment or VC investment. So, these two set of companies, mid-cap companies and small-cap companies, also called multi-baggers. These can actually fetch you 10 times, 20 times, even 50 times of return. And we will just see that how these companies and investment in them can make you rich. Friends, now we are going to discuss our investment strategy. Suppose we have got 10 lakh rupees as savings for investment in various funds. Out of these 10 lakh rupees, 7,50,000 rupees we invest in safer assets like bank deposits, corporate bonds, etc., etc. Remaining 2,50,000 rupees we keep aside for investment in riskier assets. These riskier assets are going to be group of mid-cap and small-cap companies. How to pick these companies we have already told you in sessions on how to invest in stock market. Kindly refer to those sessions to get to know how to pick mid-cap and small-cap companies. So assume that we have selected 10 companies, such companies with solid fundamentals. That makes our investment in each company equal to 25,000 rupees. Suppose a scenario where two of the companies in a short span of 3 to 4 years becomes 20 times. So initial investment of 50,000 rupees in those two companies becomes 10 lakh rupees. Similarly, 3 of the companies becomes 5 times, not 20 times, 5 times. The initial investment of 75,000 rupees becomes 3,75,000 rupees. Even if we assume that just 5 companies got completely wiped out of the market, then also our initial investment of 2,50,000 rupees becomes 13,75,000 rupees. If we consider of a more plausible scenario where in 3 to 4 years, the first 2 companies do not increase by 20 times, increase just by 10 times, that makes our investment in these 2 companies of 50,000 equal to 5 lakh rupees. The rest 3 companies which increase by 5 times in first case increase only by 2 times, even that makes our investment of 75,000 rupees as 1,50,000 rupees. Again, we assume that rest of the 5 companies got completely wiped out of the market. Our initial investment of 2,50,000 rupees becomes 5 lakh rupees plus 1,50,000 rupees equal to 6,50,000 rupees. Not a bad deal. So friends, this is how you are going to be rich. Friends, concluding today's session, If you like today's videos, do subscribe to our channel, like and share its videos. This will motivate us to keep creating such videos. Once again, thank you very much.